Hey, good afternoon, everybody. It's Mike. It is Wednesday, the 16th of August. This is our midweek recap. Market is definitely in a pullback here, and we have broke to a new range low here on the SPY after the Fed minutes. And, there was nothing new in the Fed minutes, guys. So if you're looking to the Fed minutes as to why we're selling off, there's no real reason behind it, other than that this market continues to be under pressure. We put the high in over here back on July 27th. And we hit our 3% pullback, and our 5% pullback is at 436.47. And we're working our way down to it. We're underneath the 50-day moving average now, well underneath it. However, that said, I just talked to everybody in the room about it. We are at a point where I start being careful being short. You are just outside the Bollinger Bands. You have a good signal developing on the oscillators here. The put to call has spiked up pretty high. That means people are leaning very bearish. And while that does not mean we can't go lower, that typically means you should start watching for some reversal, whether it comes overnight, tomorrow morning, or the next day. Typically, it's coming. All right, so keep your eyes on it, and we'll see what we get. We'll see how the market trades. But, we're below the 8-day, 21-day, and the 50-day now. And, we're definitely in a pullback here as the market continues to kind of weaken out here and pull back. What else is going on out there? The Qs have been in a pullback for a lot longer. Still pulling back here under a 5% pullback, new lows on the range here. Maybe that wants to come down and retest down here to 357 area. Again, starting to get very oversold short term, overdue for a bounce. The IWM here completely capitulated today. The diamonds also capitulated. They had been stronger. Energy was strong early, came back in. The financials were very strong early, also came in, but trying to hold on here. And then when we go to other areas like the VIX, we're up. We're not raging. I mean, that's the one thing to look at here. The VIX is not doing a lot. Really, what's causing this damage is bonds. Bond market selling off. We're putting a new range low in here, and that means rates are going up. And you can see the 10-year rate here pushing even higher. And we're not far back from the highs that we had in last October. And this is really what the market's looking at. The market, everybody keeps talking dollar, dollar, dollar. Yeah, the dollar's pushed back up, but the market doesn't care. It's nowhere near the highs. The market's looking at rates, and the market's looking at the Fed. And, today it still here is a very hawkish Fed. So we don't have a lot more data for this week. We have very limited Fed speak. Jackson Hole is next Friday morning with Powell. That's the important part. A lot of names are in the throwback of a pullback or even a correction. Tesla, complete breakdown here. You're 5 days below the 8-day out of the Bollinger Band. This is ripe for a bounce as we come forward. Apple here today, losing that 100-day right into the low range here. We'll see if it can hold. Amazon showed strength early, couldn't hold, down to the 21-day filling gap. Google continues to hold above the 21-day, acting better. NVIDIA, not one, but two more price target increases today. That makes a total of 6 this week because every fund is falling over themselves ahead of next week. By the way, that worries me. On a personal level, from a person that trades, when every fund is trying to upgrade the stock going into earnings after this company just came out and guided their revenue up 50%, that's a warning to me that these funds are trying to sell their positions in this and get out of it here. That said, NVIDIA continues to hold in a lot better. AMD is getting absolutely pummeled. 106 area looks like it's back in play. I mean, there's just not a lot of great stuff going on here. Roku coming off the lows, but not doing anything special. Cat was trying to be strong today, came back in. We have Walmart tomorrow morning. We have Cisco tonight. Neither one of them trading particularly well. Target was a bad report. I mean, the numbers were bad. They beat on EPS. Their margins were good, but their revenue was big miss. They guided down for the year and they gapped up big time. And it was just one of those things where it wasn't as bad as everybody feared, but the numbers weren't good. And that tells you that Target still continues to have big problems out there. What am I missing, guys? Anything I'm missing out here? Anything I should be talking about? I mean, it's just kind of one of those days. This market's in the middle of a pullback in summer. Pullback could turn into correction. We got 2 weeks left, 2.5 weeks left for this month. We have options expiration on Friday. It's a time to be extremely careful and trade less here, and I'll catch you guys in the room tomorrow morning at 9 o'clock.